Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4-hour chart of gold USD. In this video, I'll be giving you an overview of the chart of gold because as I have already said yesterday that next week I will not be available, so there will not be any videos next week. So as a result, I am giving you the overall idea about the chart of gold so that you can trade on the important levels and make some money. So let's get started. So first of all, on the chart of gold, the most important support, the most important support on the chart of gold is 1920 to 1921 we have. Okay. Sorry, 1820 to 1821. This is the most important support on the chart of gold. And what is the reason behind this? The reason is we have the Fibonacci retracement level here. And what is the Fibonacci level here? You can see that the Fibonacci retracement level that we have here is 78.6%. And why we are considering this level? Because when market was facing selling pressure, when market broke the important supports of 50% retracement level, 61.8% was the level that acted as support, that provided the required support to the market. 61.8 Fibonacci. So in case market comes down, then we can hope that 78.6 will be the next big support for gold. And another reason to consider this support as a very important one, okay, is the weekly chart. If I take you to the weekly chart of gold, okay, then you can see that around 18, 20, 21, we also have the support in the form of pivot lines, whatever you call it. Okay, so if we combine both the factors, Fibonacci 78.6% retracement plus support on the weekly chart makes the level a very strong one. So definitely we can expect some buying, we can expect some buying power in this level here. That's why 18, 20, 21, okay, this zone in the market is the most strongest support in for gold. Okay, but right now market is standing at 1896. This is the current market price here, and see, things are about to get a little bit complicated, so please watch it carefully. Okay, see, yesterday I told you clearly that there is a high chance of market reversing from the 1920 1921 level, and I have already explained also why we were expecting, and as per our expectation we saw market reversing also. But one thing that we need to focus for the next week is that, as I have already explained, that gold was making lower highs in the market. Okay, gold was making lower highs in the market. It means that it was unable to cross the previous highs. Whenever we see this kind of a scenario, it signifies the rise in number of sellers, increase in number of sellers. But yesterday gold broke the previous high. Listen to me carefully. Gold broke the previous high yesterday. So there is a chance, there is a possibility that new buyers have joined the market, and as a result, the selling will maybe over, or this time when market will be coming down, instead of breaking the support, market may take support again, because this time market has broke the previous high. Okay, generally it happens like this. See, market forming lower highs in the market, and at one point the lower high setup is gone. New buyers have joined the market. As a result, there's a possibility that the new buyers in the market will be trying their best to take the market up. As a result, this time we can expect that instead of breaking the previous support, market may take support. Okay, therefore the second important support, yes, the second important support for gold is 1870 1872, 1873 to, let's say, 1871. This is the next important support zone for the market. 1820, 1821 is the strongest support. This is the second strongest support zone for the market, because yesterday new buyers, there is a possibility that new buyers have joined the market and they will try to take the support this time. Okay, unlike the previous time, we can expect that market will be taking support here, but as we all know that no level is permanent in the market. As a result, confirmation is always important, extremely important. Okay, so if you find market coming down to 1873, 1871 level, okay, observe the market first. Yes, observation is the key. The real success, the real money lies in the observation and patience. So if market comes down to this level, observe the market and see. If you see that market is trying to take support, price is bouncing from there, price is reversing, price is being rejected from below. If you see hammer kind of a candlestick pattern, bearish, bullish engulfing pattern, or let's say a bullish pin bar harami pattern, if you see any kind of bullishness at this particular level here, you get the confirmation that yes, buyers are still present in the market and you can go for a buy position. But if we see there is a huge selling pressure in the market, then obviously market will break it. If there is huge selling pressure in the market, and as we all know that the market has been very volatile, market is extremely uncertain for the last couple of weeks. So as a result, we don't know what will happen. So if due to some event or news, if market witnesses heavy selling, then market will break the support and market will be going down. And if you see market breaking the support and going down, you can take a sell position below this level. But under normal circumstances, there is a high chance that market will be bouncing from here. If not trend reversal, at least you can expect a profit of 40 to 50 pips. So observe the market. If market bounces, go for a buy. If market breaks it, wait for some time. If the selling continues, go for a sell as well. Okay. But the market breaking the previous high, I think that there is a possibility market breaking the previous high has changed the game little bit. Okay, so these two are the most important support zone on the chart of gold right now. Clear? Now let's talk about the important resistances. The first important resistance as of now is the yesterday's sell here, sell zone, sell zone of 1920 to 21. Yes, 1920 to 21 is still a valid resistance zone in the market. Okay, if market goes up again next week, you can expect market to face selling pressure. Yes, confirmation always important. So if you see shooting star pattern, market reversing from the 1920 2021 level, you can definitely take a sell position. But before the 1920-21 level, you can see that we also have the 50 moving average acting as the resistance. Yesterday I have explained that we had 50 why we had this level acting as resistance. So coming week, okay, before 1920-21 level, for day trading purpose, you can expect some sort of selling around the 50 moving average. So if you do not have the 50 moving average on your charting platform, please add the 50 moving average, because the 50 moving average is also acting as dynamic resistance in the market. But yes, dynamic resistance is not a very strong one. That's why I'm just saying that for trend reversal, for day trading purpose only. Okay, for 40 pips, 50 pips, you can expect a selling pressure around the 50 moving average. So the 50 moving average on the 4 hours time frame is the first resistance. Okay, 1920 1921 is the second resistance in the market. If you want to see again, let me show you, because of this. Oh, sorry, no. The highest point of the chart is this. So So yesterday we saw market respecting the Fibonacci, this setup. So obviously this setup is very much valid for us. So if market goes up, the 50 moving average first resistance. If market breaks it, because it is not a very strong resistance, okay, if market breaks it, then around 1920 1921 we can expect to act as the second resistance, R2. Okay, so under normal circumstances, if there is not much volatility in the market, you can expect market to reverse from there. If market reverses, go for a sell position. But in case there is a heavy buying in the market, because we don't know anything happen in the market these days, if market breaks this R2 and starts going up, then the next big resistance for gold will be around 1948. Around 1948 you can expect market to reverse. You can see the reason, because Fibonacci setup is obviously working very much. We have seen yesterday. So if market breaks it, then the Fibonacci 38.2% retracement will be acting as the next resistance around 1948 level. So as of now, these two are the important resistances for us. Okay, you can see that apart from these levels and lines here, I have also two blue lines. These two blue lines are not very reliable. Okay, I have derived these levels from the 15 minutes time frame for day trading purpose only. If you are a day trader, if you are looking for some quick profit, these levels may act as some kind of support, or you can expect some buying there. Okay, for these levels we need to come to the 15 minutes time frame, and in the 15 minutes time frame, okay, again I am using Fibonacci here because Fibonacci is working nicely on the 15 minutes time frame as well. Okay, so here you can see that yesterday when gold was facing heavy selling, Fibonacci 50 acted as the support here. So if this level, the current market price or the last traded price, fails to provide the support to the market, then 1890 will be the next support, next minor support. Yes, next minor support around 1890. You can, when market coming down, you can expect around 20, 30, 40 pips around this level. There may be trend reversal also. I'm not saying there will not be trend reversal. Okay, at least I don't know as of till now. Okay, 1890 can be one level, and around 1880 to 83, 1882 to 83 can be another level for buying purpose. Okay, so these are small support in the market. Do not go for a heavy lot size. Anyways, whatever I have discussed so far, okay, this is just my analysis, so I can be wrong as well. Please follow your proper risk management, and please do not gamble with your hard-earned money. It's your capital, it's your responsibility to protect it. So please follow proper risk management and do the best. Bye bye, take care, see you again.